Mohamed. We're joined by Mohamed El-Erian, advisor to Allianz and Gramercy, and the president of Queen's College, Cambridge. What dictates IPO interest, do you think, Mohamed? Cheap money helps. How will this end? What do you think? How do you think Robinhood's going to do? And if the Fed were to start tapering, and it's something you think they should probably do, will that be part of the at least slowdown in all the interest here?
Morning, Joe. Thanks for having me. Look, Joe, what we're seeing in the IPO market in private equity, what we're seeing with Robinhood is part of a bigger story, which is everything in balance sheets is going up, whether it be assets or liabilities, secondary markets or primary markets, whether it be new cars or used car, everything is going up. Velocity is increasing because there's so much cash in the system. That is a function of what the Fed is doing, to connect it to your second question. So people are going to be looking very closely as to what the Fed says this week. I don't expect fireworks. I think they're going to try to telegraph so well whatever they do that nothing's going to happen very quickly. But it is all a function of not just cheap money, but ample money.
Yeah. It's been so long since we had an inflationary problem, Mohamed, that I don't know whether people understand anymore. And I want to actually talk to you about that, because you're worried that it's not going to be transitory. And we've got, politicians seem like they may have skipped this part of, when they were at college, skipped the part about inflation or economics. Sherrod Brown, the senator from Ohio, says the only reason Republicans are talking about inflation alarmism is because they don't want workers to make more money. And he's basically saying that all these rising costs are actually good because they're going to mean rising wages. Have you ever seen wages keep up with cost of living increases? Can it be a positive, Mohamed?
Sure, it could be a positive. It's what's called real wage resistance. If you haven't lived in the 70s and the 80s, you've probably never heard that word. But if workers have an ability to protect themselves against higher prices, they can end up with higher real wages. They don't have that ability today. They're regaining it, but regaining it from a low base. Look, Joe, I think there's a fundamental misunderstanding about inflation today because, as you say, most people haven't lived through it for a long time. And certainly most traders on Wall Street haven't traded through it. So it's a relatively new phenomenon, and it's being misunderstood. You know, I always laugh when people say, oh, it's isolated, it's transitory. Remember, it was chips. Then chips became new cars. Then new cars became used cars. And then used cars became rental cars. There is a logic to these inflation chains. They take time, and most people, unfortunately, haven't seen them, so they think everything is isolated. Actually, it's not. It's interconnected.
So who's going to come in and save us from what could be a period of at least renewed inflation concerns that we haven't seen in 30 or 40 years? Is it going to be policymakers, or is it going to be the Fed, or can we not count on anyone at this point?
So it's unlikely to be the Fed. The Fed has adopted a new framework that is backward-looking. They're no longer forecast-based, they're outcome-based. So they want inflation to persist for a while before they do something about it. So it's not going to be the Fed. It could be that companies can't get their prices to stick, but the CEOs I speak to, and I encourage you to ask that question, are all pretty confident that with demand booming, prices will stick. So I think we're looking at higher inflation. The big question for me is not whether inflation will be higher than what the Fed expects. I think it's almost a certainty it will be. It is whether the system is wired loosely enough to adjust to that. And that's what we're going to learn.
Shepard Smith here. Thanks for watching CNBC on YouTube.